Not everything is going to work out to the way that you wanted it to work out. That's just the way things work. You know what? You've got to be smart enough to have a second plan of action, a plan B, if so facto you want to call it that. Now, I wouldn't say that you should go into any plan expecting to have to execute plan B. It's always going to be plan A first. But if plan A fails and it's off the table, you need to have some other direction, and a good company knows exactly what they're going to be doing going forward, regardless of the way the winds of change blow. I'm Cody from Wall Street Breakdown. SoftBank and T-Mobile decided their merger wasn't for each other. They decided that last week. This is the second time they tried to merge. Even the FCC was trying to get them together. They said there's lots of competition in the telecom community in the United States. They could totally go ahead and do this. SoftBank just didn't see it. The governance wasn't right. Some of the actual pricing that they were saying, it just wasn't right. It didn't fit, even though SoftBank really needs this for Sprint. See, T-Mobile had a lot of infrastructure it would have really helped Sprint. Now Sprint's going to have to go out and do some serious reorganizing, as a lot of their infrastructure just is passé. It's getting old, and they're not able to keep up with the other two big companies. They need to be able to do this. We took a look at Sprint's earnings last week. The earnings weren't good either. Revenues are fantastic over there. They make lots of money, but they do not make earnings at all. So what happened? What did SoftBank do that was the plan B that I think is actually a good idea? Earlier this week, SoftBank, who already owns 83% of Sprint, saw Sprint have a pullback. Sprint got a pullback going into the week because of the news from T-Mobile that the merger was off the table. So what did they do? They purchased more shares. They dropped, I think it was $30+ million on some more shares. They bought, I believe it was just over 4 million shares at $4.95 or 96 cents. Then the next day when it fell again, they bought another just over 2 million shares at $4 and I believe it was 84 cents. So while the share price is going down, they're still buying. They already own 3.3 billion shares of Sprint, like they said, to bring them to 83% total. So they're the majority shareholder. But this tells me that while a lot of the analysts out there, the talking heads, believe that without Sprint and T-Mobile getting together, Sprint is going to have this restructuring take place. And what it's probably going to do is it's probably going to end up tanking the share price a little bit, as a lot of people pull out and realize that Sprint's going to have a long turnaround. It's going to be a 5-year, heavily invested, heavily leveraged turnaround. But maybe SoftBank has a better plan. Maybe SoftBank's buying up these shares at a low price because they think just because the T-Mobile deal is off the table, that doesn't mean that another deal couldn't potentially help to reorganize what Sprint needs, if not in the telecom direction directly, maybe by picking up some of the tower companies. Who knows what they could be doing? But I like the fact that they're reinvigorating the other shareholders by saying, we're not gone, we're not going anywhere. You don't let the price falling dissuade you whatsoever. It's not dissuading us. We, in fact, are going to double down and buy more of this company because we think this company is going in the right direction, or we have a plan of attack that, while we can't make you privy to it yet, once it gets executed, you're going to see why buying the stock at $4.84 or $4.95 is a coup for us. And you're going to wish that you believed in what we were doing to begin with. So a lot of shareholders, I imagine, are sitting waiting with bated breath to wonder how this other shoe is going to drop and what exactly SoftBank is doing, because buying up nominal amounts of shares just because the price is low is a fine idea, but I would love to think that this is the plan B getting executed, the very first step, where SoftBank says, we knew there'd be a pullback when the merger talks came off the table. That was a given. But it's not a given that all this restructuring, all the share dropping over the next however many years, 4 or 5 years, all the people pulling out, all the investors, all the issues have to take place. There doesn't have to be an internal restructuring. You, as Sprint, as SoftBank, companies that are very strong, have very good credit ratings, could go out and find themselves bringing in other companies under the fold that could make this a much easier transition for them. And I like SoftBank saying, we believe in this company. We're going to buy more of it. We want you to believe in it too. SoftBank's a good company, so Sprint. This could mean the first stages of a plan B being executed. I personally am waiting around to see just exactly what happens. I'm Cody from Wall Street Breakdown. If you haven't already, click the subscribe button and the notification bell so you get notified of all the great financial news videos that we do. Leave a thumbs up for this video, all videos. Just leave a thumbs up for everything you're doing in life, because life's great and you like giving thumbs up. Comments. Leave us a comment. We love hearing from you. We want to know what you think about this and everything else going on in your financial life. Lay it down for us. Let's get into a dialogue. We at Wall Street Breakdown, we love hearing from you. Have yourself a marvelous Wednesday.